Happy New Year, everybody. And like they used to say in the hide-and-go-seek game, if you're not hid now, you can't hide over. So we're going to call this first meeting of 2010 of the Full Ways and Means Committee to order. And we also are honored today to jointly have our friends with Carl Rogers chaired Appropriations Committee. So if you would call your committee to order, Mr. Chairman, wherever that is. What is it, 21? Okay, you're on.
Thank you, Mr. Chairman. Some of the committee members are here, and we're glad to be here.
And, we're delighted to have you. We expect to be here probably a couple hours today. Our agenda today is varied, but it all has to do with revenue, the state's ability to collect revenue, the processes, and so forth. It's educational for our two committees that are here because we're going to be dealing with both the budget and tax legislation that is overseen by what I consider our very capable revenue department. We have as a special guest with us today the Commissioner of Revenue, Mr. Bart Graham, and several members of his staff, which I will recognize in just a minute to give us some opening remarks and then proceed through an agenda or presentation to the committee. This idea incubated last year for mainly educational purposes for the Ways and Means Committee, and now also we've added to that by insistence of our speaker and other leadership, the Appropriations Committee that's going to be dealing with these very, very important matters as we go forward. So if anybody has anything, any member of the committee have anything for the good of the committee before we recognize our special guest? I see no one would comment, so if we could, we're very honored to have you with us today, Commissioner Graham, and the floor is yours, please, sir. If you would introduce who's with you, too. Introduce who's with you.
How's that? Yeah. Thank you for having us here today. We appreciate it greatly as an opportunity to explain a little more detail some of the operational issues we deal with on an annual basis and on a daily basis. With me today, and I encourage you to get all these names. If not, we'll make sure we circulate them as well. Mac Chandler, who does our legislative affairs and internal administration with personnel and some other things in the department. Frank O'Connell, on my far left here, is the Division Director of Tax Law and Policy. It's a separate arm within the agency that deals with all policy issues, drafting of legislation, and also when taxpayers appeal a ruling that coming out of the Compliance Division or the Audit Group, they have a right to appeal to the Tax Law and Policy Division for a second opinion. And they also have a right to appeal to me even after that. And if Ed Maney, as you know, who runs the Compliance Division, if compliance and tax law and policy aren't on the same page, the taxpayer can appeal, or they can, even if these two units are on the same page, but the taxpayer wants an appeal, they can also come to me to try to keep more people out of litigation. As you know, I'm responsible for the department, and with me as well as Denise Samuel. She's the Division Director for Taxpayer Services. Probably 80% of every constituent issue you have at some time passes through taxpayer services. So it's a very integral and very important part of our operation. What we've provided is an outline of just some things I wanted to talk through today and give some background information on. It's not the goal is not to lobby for anything in particular. It's just to provide more general information about how we operate and then take questions as we go. And so I want to spend more time in certain areas than others. And on the first section A, General Department information, as you can see, there's on total full-time employees, there's 1,126 filled positions, including 167 motor vehicle people, and 183 full-time equivalent temporary employees within the agency. If you looked at the payroll roster, you might see 500 temps on there, but the full-time equivalent is just 183, and that includes the people that are assigned our processing center. The mission of the department is to provide the best customer service of any taxing authority in the country, including the IRS. We know we're never going to be funded, nor are we going to be able to deliver something at the Ritz-Carlton level, but we should be able to outperform our neighboring states in the IRS, and that's our aspiration. Strategically, we're trying to transform the department more into a professional service firm than just a processing house, where we're just moving documentation, exchanging information to a venue where technology does as much of the processing as possible, and the people we have on staff can have the technical knowledge to do first contact resolution when people call the department or write the department looking for help. And that takes a lot of internal education, it takes a lot of job shift, and it takes some job replacement to do that. And it obviously will take a long time. We will always have a paper universe, and we'll always have people there to deal with some level of paper. We don't believe that that's ever going to totally go away, but the more that can go away, the more technical expertise we can deliver without having to ask for more money. And lastly, one thing that's integral to running the department is our systems of dual authorization and dual accountability, where nearly everything that happens in the department requires accountability, whether it's an expense control voucher that I see, or the division directors have to sign off so that everybody understands what we're buying, why we're buying, why we're paying for certain service. And it's not always that I'm approving everything per se, but that I'm confident that I'm seeing that each division director understands what their division is buying. That people aren't free to buy and spend money without us all remaining on the same page. The next big area, and please stop us anytime through this discussion to take questions, is in the compliance area. A question that comes up repeatedly, and again, we're always open to appeals from people, and it's one way I understand how the business is operating when we hear from people. But people often ask about penalty waivers and how do they get one. And there's a formal process for getting a penalty waiver, and certain benchmarks that we use to determine whether one's worthy or not. And it can be how many occurrences of a waiver you got for, or you've asked for the same thing that you or your business should know from the past interaction with the department. And an example might be an auto dealer who treated a sales tax issue incorrectly. Well, after the first occurrence or second occurrence of that, we're going to expect the auto dealer group to tell every other dealership in that auto group, have them properly trained on how to handle something. Otherwise, we could do a penalty waiver 15 times on the same issue, which means at some point they're trying to take advantage of the tax code. In the last year, for calendar year, or so far in this for calendar year 09, we approved 5,600 full or partial penalty requests. And anything above $25,000 has to be approved by the division director, the deputy commissioner of tax, who's Ed Maney, and myself. And again, it's not always that I'm the final say of who gets a waiver or not. It's whether or not we followed the standard. Did somebody justifiably get the waiver if they requested it? And we have, we get feedback all the time, well, we shouldn't waive any penalties. Well, in certain cases, it is warranted. If somebody tried to do the right thing, if they took a farm equipment exemption certificate in good faith and then found out that the person that gave them the certificate really wasn't entitled to have it in the first place, there's reason to work with people on issues, and that's what we try to do. 5,600 full or partial requests that were granted. And again, looking at productivity and efficiency, just us taking the time to go through that process, to approve or not, takes a lot of time and productivity of all the people in the agency. Yes, sir. That's what was granted. I don't know what the total request number was. And Denise or Ed, do you know exactly? Sometimes we're criticized for not, my friend couldn't get one. Y'all must not do any, or CPAs might say, well, none of my clients are getting one. Well, they are. And the way we do this, it's documented. I mean, if an auditor wanted to come out and show us how you do it, show us the written procedures in place and the sign-offs, I mean, they're there. They exist. Another question that comes up often is on installment loan plans for delinquent taxes. At its peak, a number of years ago, or early when this administration came into office, my information is that we had somewhere north of 20 or 25,000 installment loans. We were running a bank. And a lot of people that were on these plans were defaulting on the plans, and once they got a plan, they didn't, if they met the plan, they weren't meeting the current sales tax obligations, for instance, and their response under compliance checks was, well, I'm sending you what I agreed to send you. It's like they were sending us an allowance out of what they owed. So we put some procedure around it. I even had Mac and some others spend some time trying to source some bank loan software that we were actually going to use to manage this portfolio of loans. But we did an overhaul, got it centralized functions so the same terms and conditions apply to who qualifies for a loan. If you default on a loan, then everything is immediately due and payable. We also require the direct deposit or direct debit of your account in order to maintain the loan approval. And some people feel that's onerous, but our default rate went from 28% to 14% when we did that. And so again, not having to chase delinquent loans, which is not our core mission and core business, has saved us a lot of productivity in the process. In that delinquent loan process today, there's 10,931 installment loans in place today. And as you know, that's a big time consumer. But in certain cases, it's warranted if we can keep somebody in business. The appeal we often get is, well, they employ 40 people, but if we've engaged with a certain taxpayer for a certain period of time, and their source of funding those employees is a trust tax, then that's obviously a problem. It's a problem both from a policy standpoint and from a statutory process.
I was going to ask you, is there a specific criteria to determine whether or not you extend the installment loan treatment to taxpayers?
There are different criteria that are used to apply, but it's not as though you have to hit the threshold on all 5 conditions per se. It's, does the situation warrant it? Have you had one in the past? Did you default on one in the past? Ed, do you want to add anything to it? I'm going to let Ed Maney comment.
With individuals, if we haven't engaged with them in the past, generally anything that's approved, everything is approved automatically if it's for less than 12 months. That's for individual income tax, as long as we haven't had a problem in the past. Above that, I can approve certain installment plans for a longer period, but at that point then financials are required, the financial information that's required from that taxpayer. But again, below 12 months for individual income tax, nothing is needed at that point. We automatically approve them, and because we're using the debit process. For trust taxes, which are withholding and sales and use taxes, generally at the regional office level, and there's 11 regional offices around the state, folks that work in the compliance division, those offices are authorized to do installment payment plans with a third down and with terms of paying it off within 12 months. Beyond that, it has to come generally to my level or to my direct report level. But again, it's a third down, and sometimes if there's been embezzlement, as an example where we might waive penalties, as the Commissioner talked about, where there's been proven embezzlement and somebody's been prosecuted or at least shown to be intended to be prosecuted, it may be a longer period of time. And I can approve anything, usually up to 24 months. That's the trust taxes.
I wonder, frankly, what sort of a message that sends. Is there a detriment to a taxpayer to go into an installment situation? I mean, why do we approve it the first time if it's for less than a year? I mean, a due date is a due date, and with trust taxes especially, it's not necessarily just the state's revenues, it's local government's revenues. That, in your judgment, is there enough benefit to all levels of government to do this just as a matter of course? And what kind of message are we sending to income tax? I can understand, but fiduciary taxes to say, look, steal our money and we'll put you on a payment plan. That doesn't sound right to me. Why are we getting the benefit out of that is my question.
Well, when we do that, I mean, when we first started reining in this process and centralizing this process, before that, you could venue shop. You could go to different regional offices or different people at Century Center and get a different answer and get a different loan. That's all stopped. They have to provide financial statements. I'm speaking specifically to trust taxes. Have to provide financials and establish that they're a viable concern, that they can overcome the problem and get on track and stay on track with their current liability. And if they can't, we don't do it. I mean, some people argue, many people argue all the time, well, aren't we better off with that $20,000 more if you let them keep operating? But to your point, my philosophy is, once you do that, then we're running a restaurant. And that's not our purview to appropriate money to run a restaurant. There's not a state cafeteria across the street. And we don't do that. And that's why people often get a no out of that question. But in some cases, we do think it's reasonable to provide that venue. Some of the plans years ago were 4 and 5 years, and with 12% penalty and interest, it was a negative mortgage. They would never pay it off. And that practice has all been reined in, so that it doesn't go on anymore.
Is that Representative Williams?
Commissioner, you may answer this later on, I don't know. What happens when someone asks for a waiver of penalty or to pay taxes and it's determined there's no possibility that they can pay, they don't have the ability to pay? What happens after that? I've got a case that I think is sent to Revenue already about this, and the man is literally broke, so he's made an offer. If you turn it down, then what happens?
Ultimately, the business is closed, and the assets are taken by the state and are sold for what money we can raise. They have to understand that the way the code is written, from the second they collect that sales tax money or they withhold money from employees, that's state property. And it's just human nature. People make it part of their working capital. It's like a real estate transaction that goes bad. I'll make it up on the next one. The next one doesn't come. But again, we try to be reasonable with people. If somebody might have a finite event happening, that they may have a chance to sell it, and they can show that they're working on selling it, and there's a closing date set, we'll give somebody a bridge to get there on occasion. Chairman O'Neill, to your question, of the 10,000 plus installment loans, there's 360 that involve trust taxes. If you try to put it in some order of magnitude. But we're always open to review each case. Well, there's a section here in a second talking about responsible corporate officers, and we'll talk about that in a second. Part of, as I told Chairman O'Neill, we're not going to talk about all the thresholds we use because on a regular basis, because one, the thresholds change depending on what kind of fraud activity we see coming at us from time to time, and people will try to manufacture their results to get under the threshold if that's public information all the time. But one standard that we do use is if people are asking for relief and they want the state to take a break, take a discount, settle it for less than the tax owed, and they've misappropriated a trust tax, for instance, and they've claimed embezzlement or some other event. Well, if there's no civil or criminal prosecution or civil litigation, it's obviously not that important to them. And not to bring religion into this, but how many times I hear somebody's a deacon in the church and they didn't mean to misappropriate the money, but they did. I can't worry about everybody else, no matter how much I would like to. They might be good people, but the fact of the matter is they broke the law when they did what they did. And so in order to resolve that case, we have to move forward. The next two areas involved in the same process is a levy process that gets part to the heart of your question. But again, we answer this question with some pause because some people will take evasive action when they know how we do this. But it's all spelled out in the code. I mean, it's very clear what we can and can't do. It's just how we use it. And I'm going to let Ed speak to the levy process, and then also some of the responsible corporate officer is all coming on.
The levy process that we use is part of our collections procedure manual, and it's used by all the revenue agents. And that process can only begin after a public lien is filed against a business or an individual. And for the purposes of my examples, I'm really just going to talk about businesses, because that's where we use most of our levies. And you may have constituents who have heard of the department closing businesses, and that is a levy, if you will, where we can actually padlock the business and take all the personality inside, and it's really against the personality that's inside of that establishment, many of which are rented, so that's the only thing we can do. And those are our last resorts. They're time-consuming. They take resources, and we very often do not like to do that unless it is the last resort. And this is only after we cannot do an installment payment plan, keep folks current, and we have no other choice. Sometimes we look for levy sources like bank accounts. And again, we make sure that that particular business has been notified within the past year that they still have this outstanding obligation in case we haven't notified them in the past year. And we go ahead and look for a levy source. And again, if we can't do an installment agreement, the levy source could be a bank. And again, we don't advertise that because the money would be moved. So we levy the bank account. We generally freeze it. It's called a notice of delinquency, and the bank will freeze it. And at that point, if there's any money in that account, it gets turned over to the department, and then that taxpayer will deal with the department. They do have a due process there. They can file a notice of illegality and appeal that levy if they want in court. So that's generally how the levy process works. Sometimes when we go into a business, we'll do what is called a till-tap levy, where we won't close the business, but we're going to take anything that comes out of the cash register that's in the cash register that day. That's usually not very profitable. We generally do that at the time we do closings of businesses. And that's the levy process. And I talked a little bit about the due process that's done before we do that process. In terms of the corporate officer responsibility, this is only for trust taxes or responsible party responsibility, if I can use that term. This is where we have a business, as has been described, that diverts sales and use tax or withholding taxes that are due the state, that is a state fund, and is converted for use in that business. There's a statute that allows us to go after the responsible parties that were operating that business. So we make the assessment against the business first. We go through all the due process. We get to the lien stage, and then within 3 years of filing that lien, we can then begin the assessment process against responsible parties. Generally, the person must be either a corporate officer or an employee of that company. There must be some physical evidence that that person has either signed the return, can sign checks, and thirdly, we must show a willfulness on their part that they knew about the liability and knew about the non-payment to the state. And if all those three things are present, we then can propose an assessment against that corporate officer. And this will continue to follow them even if the other levy lien becomes uncollectible. So again, there is a due process. We propose an assessment. If it's proven to us that, gee, maybe I made a mistake and shouldn't have been included, or somebody included me as where I may have put some money into the business, but I really didn't have anything to do with the operation day to day, at the point they protest the proposed assessment, and at that point we can relieve them of that liability if they weren't responsible. So that's generally that process.
Two questions that came up when I was listening to that. One, did you say it's 3 years after you've levied?
No, within 3 years. Generally, though, it's done within 60 days.
Statute barred after 3 years.
Okay, so there's a statute of limitations
Yes,
of 3 years.
That's correct.
And we're talking exclusively here about trust taxes.
Only withholding and sales and use tax. That's correct.
Could you go over the timing from a default by a trust tax collector and the response by the department in chronological timing? What you do when you suspect a default's taken place?
We send a notice of proposed assessment.
When?
Right now, if it's a known assessment and it's filed electronically, it's within 30 days
Within 30 days
Within
of what
30.
event?
of receiving that particular return with that mistake on it, for example.
What if we
Or
have
within 30 days of an audit.
What if we have a tax collector, I'm going to call them, not taxpayer, because they're really holding state's funds?
Right.
What if we have one that's been filing fiduciary tax returns for 10 years and all of a sudden there's no filing? Does that alert us that we might have a default out there?
That process is sitting at 60 days right now. In other words, 60 days from the point that that return should have come in. That we give some time for the processing of it, but right now it's at 60 days. Historically, Mr. Chairman, that was before we have this new integrated tax system. That may have been 4 or 5 months, but now it's 60 days. And for electronic filing, this month it'll be within, I believe it's 3 days of the purported receipt of the return. In other words, if we don't get an electronic return, we're going to send out a reminder within 3 days. Where is your return?
Within 3 days. That's part of our new.
Yes.
That's a functionality we're adding with integrated tax and the sales tax venue. So if the return's not there, within 3 days, we'll send a reminder notice toned to be a reminder. Did you forget? Was your controller out of town? So it's more customer driven. And then if it doesn't come after that, somewhere in that 30-day range, we'll start hitting them with the compliance collection activity that's allowed under the code.
And that was implemented, or is that already implemented? The timing of that, was that what went into implementation in April, or is that what we expect starts in January?
60 days went in April when we first turned the system on because we wanted to make sure it was working right before we started firing out a bunch of erroneous notices. The implementation on the customer service impact, I don't know if it's rolled out yet or not, but Denise, do you know if the program is finished on that?
It will come into place in January this year.
So it should essentially be going on right now.
Yes, sir. We're testing it now. So.
Last question on that. Okay.
If I could a little more on that, that's for electronically filed returns. And
Right.
dropping the threshold to require more electronic filing that we're working through right now this year and next is going to help that tremendously. You know, our history and the IRS's history, if you look back at how they are evaluated by Congress on audits, when they're perceived to be overzealous, Congress reins in their auditors, it reins in the number of auditors, and it ebbs and flows over time. The reason it's at 60 days, the legacy reason why it was at 60 days, which goes, I think, back before my time, is lack of confidence in the old system that we weren't sending out. It would give us time to make sure we weren't sending out erroneous notices. There was a reason for it at the time, but we're now overcoming that.
Well, you don't disagree with me, I hope, that the longer we let these defaults fester, the less likely we are to collect a
No, sure.
fiduciary tax.
No doubt about it.
We would be on the same page if we worked together to find resources for the department to respond to even potential defaults literally instantaneously, if that's possible. Do we have agreement that that's going to probably collect a lot more due fiduciary taxes to the state?
I would agree with that. The part that we're trying to make the value proposition on as well, though, is making sure that what we send out, which is the advantage of the reminder notice first, that electronically, because we were going broke on postage, is that people instantaneously pick up the phone and call their CPA and start incurring costs. And we want to make sure we're right before we do it, because we get just as many complaints about you're wasting my time and money because you were wrong, the return was there and you hadn't processed it yet. The paper return was there and you hadn't processed it yet. And that was another reason for the 60 days, to make sure that everything in the processing center was processed current. But that was a hard, fast plug, and we now have more flexibility to work around that.
And I agree. Obviously, there's a diminishing returns. I mean, the paper threshold now is 1,000 and under, going to 500, right? It was 5,000 this past year.
Right, but to make sure we give people adequate time to install the system, learn the system, and use the system, we're not going to be enforcing penalties against those people in this month. It's going to be staggered throughout the year as they are trying to do it, and they're making a concerted effort to get in compliance, it'll be some time before we start penalizing companies for that, because we don't have the staff to train them all on the schedule they want to be trained on.
And I'm glad for that. Thank you. We don't want to punish our business, especially small businesses, as they convert to this system, and I'm all for that. But I'm all for collecting fiduciary taxes. I look at those as just that, trust taxes. And
Well, the collection arm is here, but Denise's group is the one driving the integrated tax project, and that's why she's here.
Chairman Rogers, sorry.
Thank you, Mr. Chairman. Commissioner, y'all did get some stimulus money for compliance, did you not?
There was some stimulus money that came our way, but the other money was pulled out of our budget. It just made our budget whole. It was not additive budget money.
It was not?
No,
Okay.
not to my knowledge. I can confirm that. Mac, if you'll confirm that with Chris Walker, but my understanding is it was taken.
Okay. While I'm thinking about it, Mac, I was going to get a list of stuff from you, and I hadn't received it yet. That exemption, 110 exemptions. You remember that? Okay.
Number 11,
Mr. Commissioner, I've got a question. I know maybe more to Denise. I've encountered myself personally in our business, but have other folks during the integration of doing the online filing, that those that may have reporting requirements that are a little different. For instance, we report on a 13-period accounting versus a 12-month accounting, 4-week period. We ran into all kind of snags with that. Kept getting notices that we were late. And can you update us on that? Is that because I'm sure we're not the only one that is filing like that?
You're not, but those exception processing have always been a tremendous resource burden on the department to try to be accommodating to people, but it does present quite a few conflicts in it. I mean, you want to take that in because it also comes up in the compliance world.
I'll attempt to take it.
Okay.
Are you getting these notices now?
We are. Mm-hmm.
Well, we tried to work with everybody that was on 52, 53 weeks or 13 reporting periods, and there were probably 5 or 6 different ways to do that, believe it or not, different days ending. And I think we worked with everybody and came up to primarily what most were using, and we have 2 or 3 options. 2 options.
Can I interrupt you? Could
Yes.
you state what I'm not sure I understand what you're asking. Could you repeat the question where we all know what you're talking about?
Yeah, I'll try. A lot of businesses most report on a monthly basis. By the 20th of the month, they report for January's sales tax that they were withheld. Some businesses report on 13 period every 4 weeks because that's the way they do their accounting. They're on a 4-week basis instead of a monthly basis. And so for years, businesses like mine have reported sales tax on that 4-week period accounting. And I'm sure I'm sure there are many businesses all over the state that do that. But when we went into this integration of online filing, it threw up all kind of red flags and all kind of snags, and so that's the issue.
Some examples would be like in the hotel industry. They might have a year end that's in the grocery industry. They might have a July 5th year end or a January 2nd or 3rd, so they capture those final holidays in their year end result. Historically, we've tried to be all things to all people. You can have any cutoff date you want. You can have as many as you want. You can have as few as you want. It's hard to program around that and schedule resource around that without people, not with ill intent, but work in the system. And Denise, you want to talk some about the issues y'all deal with on that?
It's just a very manual process, and so what we try to do is give, and wasn't that many taxpayers. The majority of taxpayers do pay on that monthly or quarterly basis. But for those who need that special filing consideration, we try to give them 2 various options. The 13-week or the 26 pay periods, I think, were the only 2. We sent a letter out, and I hope you received one. Okay, saying that these were going to be your options. And if you didn't respond, then we made you just a regular monthly filer at that point in time.
Well, I'll follow up with you guys
Our job is
offline.
to, follow with me offline.
I didn't know whether there was a lot of folks like that or there was affecting, okay, small, okay.
I mean, we can give you the exact number because we talked. I was involved in the planning and the decision to reduce the number of options that were there. But just put in order of context. I mean, you have 1,200 employees plus 180 part-time workers for making full-time equivalents. But we're processing 11 million documents a year. There's only so many options you can offer people with the number of people you have.
You're not going to dedicate one solely for Cheddar's restaurants?
We make arrangements for that for people who will pay for it. There's a couple of state agencies that are quasi-state agencies that we do work for, but to make sure that we don't hold their customers up, they are actually funding those positions, and they can come in and audit us at any time and see these are our folks doing their work, but in a controlled environment so they know that taxpayer confidentiality is preserved. There are options.
I should have commented back at A, but I was going to wait till the end, and now that we're questioning and whatever, I just want to commend you on a wonderful staff that you have. I had
I think we're leaving now. See y'all. Thank you.
I worked with your staff with some liquor license in December, and I could not have asked for a better help from everyone. Melanie, I believe, was the young lady's name, and I wrote a letter and copied it to the governor because he needs to know what your staffers are doing, and they did a great job. We were fighting to help keep a store, a business open that was going to close, so they had not sent in their liquor license money, and as a result of their help and expertise, we were able to collect for them, keep them open for the New Year's, and they're right now they're still open, and we're well into January. So, thank you for jobs well done.
Well, thank you. They don't always work out that way, but I appreciate it.
Representative Knight.
Yeah, Commissioner, it may be helpful as we go through this process. I think with legislation last year, as we start to lower the threshold and we start to see more compliance come online electronically. But as you go through this, maybe we want to talk about the two different processes of what it used to be like or what it's still like with some of our paper returns versus, or make that comparison. I know we've been sort of talking in terms of the days and the cutoff periods, but showing hopefully the increase in oncoming efficiencies with electronically shifting this into letting technology work for us, but sort of also take us back as we, what is going on with some of these payroll reports or sales tax returns coming in that are still paper. How much time does it take? What give us a comparison.
It's the time and the cost. I mean, one analogy you could draw is think about a major retailer you might go into that has human cashiers who are now going to automated cashiers. You can have more customers come in the door, but if you don't have cashiers at the exit, you're going to back up a line, and that's exactly what we ran into last year, in producing refunds. What happens with a paper return today is Postal Service to our processing center. First, it goes through a mail open and sort process. Then it goes into an area where it's organized so that the optical character recognition machines and the scanners can read it. It goes through the scanning process, and most of us in our daily lives have thought about scanning something, and well, I've scanned the image, there it is. But when you're doing 11 million documents, you have to index every one of them too, so that when somebody in taxpayer services receives a phone call from the taxpayer, their CPA, they have to be able to see that document, and they have to look it up by some reference number, and that association is what is so complex in the process. So once it's imaged, that image just images the document. It doesn't do the data entry that might calculate the printing of a return or refund. So then the item goes into a data entry section in our processing unit where they do the data entry that will create either the acknowledgement of the payment or the refund. And then some also always kick out of that because the math didn't work, it didn't reconcile, and somebody has to get manually involved. Those returns then are then sent to Denise's unit in taxpayer services to contact the taxpayer by phone or by write. It can take forever to go through that process. And historically, when this administration first started, when I go out to the processing center, every room in that building had shelves on it. And we were paying people to load accordion folders worth of these batches of tax returns that would then be put on shelves before they'd be pulled down to be data entered. And then people were marking on the back of the folder what was, what the date was and what range of returns was. None of that is productive use. It helps the customer at all. We finally had to tear the shelves out of the building to keep them from using them. There are none out there anymore when you walk around. I mean, we did. And we literally took balls out of the building too. So there was one whole file room that was probably the size of the center atrium in the Capitol, just full of files. And that didn't add value. With an electronic return, the taxpayer fills it out, and it's almost like when you order something online. If your information isn't correct, it rejects it. If your payment information isn't correct, like your credit card, it rejects it. It's the same process today that, the burden is on the taxpayer to get it right, and the incentives, when they send it to us, it can process overnight, especially a refund, if it doesn't have, isn't pulled for further review because of some anomaly that's in the return, because we do have fraud detection that goes in all this stuff. But it goes from having dozens of people touch something to having one person maybe touch it. And that's the order of magnitude. I firmly believe in the way we're trying to do everything in our universe is that most people want to be self-sufficient. But if they take care of themselves, if they want to do it at 10 o'clock at night, they don't want to have to wait 8 o'clock in the morning to talk to somebody. But if they need help, they can get to somebody that has technical expertise to help them solve it. Because there's nothing I hate more than to get on a phone system and, here's your list of 5 questions. Well, that's not my question. My question is different than all that. There's no stream that I can follow there to get me where I need. I need to talk to somebody that can resolve it. And that's what we're trying to do.
I think I have one more question, Commissioner, this is a very ambitious outline, so what I think I'm going to ask the committee to do is make note of their questions as we let you go through the rest of your testimony, or not testimony, but presentation to us, and then we'll have some Q&A at the end, since time kind of is at this. But I have one more question, number 25. Is that Representative? Who's that? Representative Powell.
Thank you, Mr. Chairman. Mr. Commissioner, it's my understanding that there was a pilot project that was conducted on sales tax compliance in Hall and Gainesville and Chatham and Savannah and Lowndes and Valdosta, and there may have been others, to compare business license applications with sales tax payers, and that there were quite a few people who were buying business licenses at the local level who did not appear as having a sales tax number or paying sales taxes with the state. My question is that was it significant enough that it's worth exploring doing that statewide, and do you need statutory authority in order to share that information? Because it's also my understanding that the local governments involved also found out that there were people that were paying sales taxes that did not have business licenses. So it seemed to be mutually beneficial to both the department and to local governments.
That might be a rather long conversation. Do you want me to go into that now, or you want to cover some more of this first?
Is that on your outline later on anyway, that pilot project?
The pilot project itself is not, but I certainly want to talk about it because you and I have talked a bit in the off season about some things that we can do. But we can go ahead and do that now.
Would the gentleman yield the answer till the end of the outline?
Sure.
Because that was on our agenda that we were going to ask anyway, if you don't mind.
Sure, I don't mind.
And that is a very, very good study, and there has been much learned from that, as you have pointed out to the committee. And I do want him to be able to go into that in detail without interruption. So
okay.
Why don't we try to finish then your outline? Even if you have to summarize a few things, and then we'll come back.
I'll actually skip some section, but the initial answer is yes, it's been very beneficial, but it's a qualified beneficial going both ways. In certain cases, on the first 2 passes, you'd find a major retailer or restaurant company that was not registered. Well, they're up in rage, like a Waffle House. Well, that's because they're filing under a master license somewhere else, because it's a company-owned store, not a franchise store. So it's a long process you go through to make sure that, again, if you had the perception or your constituents had a perception this was Big Brother raising Cain with everybody, the nature of this conversation would be totally different. And we're certainly capable of going that route. We don't want to go that route, but it's a worthy area. I'm going to flip back to there's mainly two big areas in the outline I want to make sure we hit on today. On taxpayer services, which again is Denise's world, you often hear us, and for the last 3 years you've been funding our integrated tax system expansion. Sales tax went live last spring. Withholding tax went live in December. Corporate, IFTA, and bankruptcy will go live in October of this year, and then we hope to have individual income tax in that group during 2011. The customer front of integrated tax, which is why we're doing this primarily, isn't just to help us internally, it's also to help the customer. And the customer front of integrated tax is what we call a Georgia Tax Center. And it's a web portal that allows customers to take care of things at their leisure rather than sending a notice into us and hoping we get the information right, hope somebody types the address right, where the customer can view their online tax information. They can file returns that way. They can store returns that way for future filing even. They can warehouse them. They can make payments. They can seek waiver of penalties. They can make refund requests. They can do their own address corrections and changes or file a protest. And they can request a change in filing frequency, although the option may not be there that he wants. But all that stuff is stuff that historically has not been available to the customer. They had to mail something into us or call us and hope the person on the phone got it right when they put it in. Just some statistics on what we've got going through the tax center today, and this is since May of 09. 172,000 sales and withholding tax payments have gone through there. 189,000 returns have gone through there. 4,200 returns have been stored for future filing dates. And that's just a flavor. That sort of magnitude. Historically, that was all being done by paper. And if you're familiar with the paper sales tax return, it's 13 pages long because it has to list every county in the state or every other sales tax jurisdiction in the state, even if they're not applicable to you. The downside of that is in the old system, when we get that 13-page return, we'd scan the whole return, and so we're scanning pages that have zeros on it. In GTA, because of the billing structure to support our backbone operation, there's an internal charge for running those computers because you can't parse it out when it's a paper return. When it's electronic, it captures only the data that's relevant to that return, partly to the answer to your question. So there is an additive value in it, too. One area that's important to us, too, is we've done total revisions to some of our legacy operation practices. And what I mean by that is if you look at, number one, net operating loss returns. In 2009, 3,250 NOL returns were submitted to us. A lot of this is being driven by the bad economy. But the way we used to process these is that it would start through the processing center. It would be opened, scanned, imaged, indexed, and data entry would start. And then once we saw that it was that type of return, we'd stop the process and send it to taxpayer services, where an agent would have to take it and start all over again to make sure that somebody wasn't trying to create a refund they didn't deserve. So there is audit work that has to go into these things because, I mean, these NOLs that produce large refunds, I see a lot of them. I mean, we get thousands in the hundreds of thousands of dollars. We get hundreds in the millions of dollars, not just NOL returns, but refunds like maybe a sales tax audit review or a consultant might come in. You want us to review those. You don't want us to audit every one of them. But historically, we've been, in essence, auditing every one of them and redoing the work that any CPA might have been doing. So now we're moving to where it's a statistically significant percentage of them, we're doing the manual review. The rest of them, we're moving through the process at the processing center without sending them out to Denise's group. If we send them to Denise's group, that's just that much more resource we can't have on the call center phone lines to answer questions for people. And that's a big transformational thing because some of these folks have been doing some of this review work for 25 years. It's their baby. That's what they do. That's what they know, and that's where they want to be. And so there's an HR component to making that transition, too. We go through the same thing with amended returns. There are over 90,000 of those in 2009 that were getting plucked out of the processing center for manual intervention beyond what we historically have done. We've changed all that. Same with high dollar corporate and individual refunds. In October through December alone, we had 98 refunds for over $33 million. So do the math. I mean, that's on the average of that number. We can't just flow it through there. When you see the amount of fraud that we're detecting in our special investigations group, these weren't being looked at. And some you can look at and tell it's perfectly sensible, given who the person is. In other cases, you wonder how and where it came from, and did they manufacture it. Another entity or another area where we've changed a lot of our practices on pass-through entities and the acceptance of first filing on partnerships, LLCs, and LLPs. Historically, if someone claimed a best credit or some member of an LLC or LLP filed for a certain position and they filed early to get a refund, like in March, April, or May, we would hold that return until the corporate return came in, usually at October 15th. So we've alienated the customer for 6 months while we're waiting for the corporate return to see if the math reconciles between what came on the corporate return versus that of all the members that were going through it. We have the ability now to go back and find them. We know where we sent the refund. We know how to go get them if that's what's necessary. But we've revamped that whole process too. So, and the primary driver with that was the economy. You had so many people filing NOL returns, amended returns, and these type of pass-through entity returns, trying to get cash to stay in business. We couldn't just hold them up any longer, and that's what we're trying to work around that. Denise's shop, as I've said, is the customer contact center, where most of our call centers that deal with customers go through them. In 2009, 1.1 million phone calls came through her unit. We're not trying to get staffing to answer that many calls. We're trying to make calls go away that aren't necessary. If you call to ask about your refund, can't get somebody to answer the phone, you call back 6 times, that's not helping that number, and that's not helping the customer. So that's what we're working on. I won't go into the alcohol renewal process. In the processing center, in the last year, we've put the processing center under singular management. Tim Shields, who's not here today, but you'll probably meet during the session, he now is responsible for processing on both the tax side and the motor vehicle side. Those two universes are split with an actual wall and security to keep people from going back and forth, so people in the motor vehicle can't see tax information and vice versa. And then we took some of the legacy management from motor vehicle processing and made them part of our tax law and policy group to help the tax law and policy group answer questions for people on a technical level that understand. They also do some of the training for the counties as it relates to motor vehicle. As I said before, we're processing 11 million documents in the processing center. 2.5 million of those, or excuse me, 2 million of those are now being done by Bank of America through one of their processing operations, which is a tremendous saver for us. They do similar work for the IRS. They maintain the IRS security standards and ours. In some cases, ours are more stringent than the IRS's, but that's been a very worthwhile partnership that we've worked through. And we have contingency planning in place that if for some reason they quit doing that business, we'd be able to handle it and keep the train on the track. And again, on processing for 2009, we're trying to tell every CPA firm we can find, please tell your constituents to file electronically. We can get somebody an electronic refund in 8 to 10 days, worst case. As the season progresses and our budget issues tighten, it can be months, and we're trying to avoid that. We want the refund out as soon as we can get it out. The best way to do that is electronically. I'd love to spend some time talking about technology, but maybe if we get together on Thursday, Chairman, we'll go into that. But I thought one area we might hit on today is in the special investigations world, where we do our primary fraud detection. That group within the department deals with refund fraud, tax preparation fraud, internal affairs within the department. Every year we have people that decide to do foolish things, and we're not talking about taking too many absences. We're talking about criminal theft or compromising of taxpayer information. We also work extensively with other agencies, both at the state and federal level. We currently have 3 guilty pleas and 5 indictments pending for either preparation fraud or refund or just general tax fraud. And then we do background tax compliance checks both for the department. Every member of the department, including me, is subject to a background tax compliance check every year. And even with that, every year we find a couple people who decided they were exempt this year, and they go home. They're done. And if it's material or if it happens again, we prosecute them. We also do that for the Department of Community Health on child dependency cases or income qualification for what benefits, to make sure that people aren't earning over the income threshold that would get them benefits. We do work for Georgia Lottery, and we do background checks for the GBI and the governor's office on his staff. And so it's a very time-consuming area. But on refund fraud alone in 2009, we blocked 32,000 refunds for over $34 million that never came back. And we're not talking about the compliance world or taxpayer services where somebody had a deduction disallowed. These were people, or in one case, I think I told the story last year, as the case continues on, out of Montgomery, Alabama, they had a prison list. Prisoners, Social Security numbers, and they're just firing non-resident partial year returns at us all day. And so we're mapping and tracing where payments are going, whether by mail or electronically, and to different bank accounts. In some cases, they're going offshore. And it is nonstop, because if you think about it, given the penalties that are out there, you're going to jail for a long time. You walk in a bank or a retail shop with a gun. You try to get one of these refunds, and you're going to hope we prosecute you for tax fraud. And to do that, we have to go get other jurisdictions to go with us, to go to a judge, to get a warrant or a subpoena, to then go get somebody. I hope we find somebody. We have tax checking or cash checking operations working with us on a regular basis. If they know who we're looking for, they have some suspicious activity, because they don't want to cash a check or run it, because then they got to eat it, because we're not going to reimburse them if they take it. So they'll call us and tell us, well, we can get in the car and go over there, but if you don't have the power to arrest them or go to a judge and do it, that person's going to be long gone. But and so we spend a lot of time chasing people around, because it takes numerous occurrences to catch them. Usually, though, if they do it once, they'll do it multiple times. We have some current cases that are just taking place in the last 7 days, where, in this case, they were stealing actual revenue checks. They weren't fake checks. They actually stole some, and 2 people are sitting in jail right now, waiting for their case to advance because of it. But thankfully, we had people that we've worked with on the outside that made what's in the industry called a rat call, made the rat call and let us know what was happening, so we knew who we were after. But that's an area that can use as much support as this state wants to dedicate to it, because I can tell you, before this administration, and this isn't to cast disparaging remarks on the previous administration, they didn't have the resource to deal with it. At the time, we cannibalized resource within the department. We hurt taxpayer services in order to combat this. We took money from there. We took money from compliance in order to put this division together, this unit together. If we didn't have this division, another $33 million would have gone out the door in the last year fraudulently. And that's just ones we've caught. We know some cases where we didn't stop them before they happened, and they cost us into the millions before we stopped it. And put it in order of magnitude, you have 3.5 million return, or 2.5 million refunds a year, 2.5 to 3 million refunds a year going out. All it takes is 1,000 of those at the right dollar threshold, and you've spent a lot of money in a hurry. Now, this state, as you know, has gotten tremendously large, and you can't see it necessarily being in any one part of the state, but there is a lot of commerce moving through here now. Would you like me to move into technology? You want to take some more questions, or do you want to take a hold for today?
Well, we actually, we've got about 45 minutes left. Did local government and property, did you skip that one? And also alcohol, tobacco, motor fuel?
Oh, I can go ahead and go through that. That's fine.
If you would,
sure.
and at the same time, the examples, what we're looking to learn here is that what possibilities might exist out there if the resources were available to improve our ability to enforce our tax code, essentially. And like when we switched to the rack on motor fuel, what happened after that recommended switch in the tax law. would the same be possible for other taxes? That sort of thing is what we're really interested in hearing from you, and I'm sure there'll be some questions about that. But if you would finish your outline, at least on those last two.
Okay. Well, one area I'll just briefly go through is on the new technology. I mean, sometimes I hear people characterize the department as being totally antiquated. And every initiative you see listed in there is technology that you have funded in the last 5 years that we've deployed that's making this a very sophisticated operation compared to our peers around the country. We've talked about integrated tax. We've talked about the Georgia Tax Center. Ed, if you'll briefly comment on the data warehouse and the benefits that we're getting from the data warehouse that was also funded in the last 2 years, I think that would be, but if you do it just briefly.
The data warehouse is now up and running, and the benefit from that will be to find taxpayers that are not currently filing with us. So it's going to use a number of disparate resources, systems from the department, information from the Secretary of State, information from the Department of Labor. We're running the Hall County pilot out of the data warehouse right now for local government, in terms of the pilot project. So we had initially 90,000 leads coming out of that. We send out, I believe, and I'll get the exact numbers as the committee desires it right now, but we're in the process of perusing through those 90,000. We've already sent out, I believe it's 6,000 letters of that 90 to taxpayers, and we've got registrations from a lot of those. We've done some forced registrations, and there's a process that it goes through in terms of asking the questions. We think you should be registered. So it's sort of like, we know you're doing business here. We heard you're doing business over here at the Secretary of State. Why aren't you registered with us? So we go through that process with it, and we expect that to prove a big benefit to the state.
Voluntary disclosures have you got?
I'm trying to remember that. I don't have that figure with me. We've gotten a number of voluntary disclosures because of that process. That process was, the data warehouse was funded more than a year ago, and we talked about it almost 2 years ago this coming summer. And as a result of that, the department received close to $30 million in voluntary disclosure. So what's a voluntary disclosure? It's when someone from the outside comes in and says, I represent a business, and that business thinks that they should have been filing in the state of Georgia and should have been paying tax. And what we do with that is we limit the look-back period to 3 years. They file returns and pay the money into us, and we normally waive the penalties in that case because they weren't on our radar. In the warehouse, that's not going to be the case because we are notifying them through the warehouse. So.
Part of the, put in context, when we first started asking for help on the data warehouse, I told a story about the airport vendor we dealt with, chasing the same guy with the same business entities, or excuse me, different business entities at the Savannah airport, and he also had Atlanta airport operations. All were delinquent, but we were chasing them with 2 different divisions in the department, plus the alcohol and tobacco division. With the data warehouse, we ultimately got there, but it took us somewhere in the neighborhood of 9 or 10 weeks to figure out it was the same guy that controlled all this. With the data warehouse, we'll get to that controllership a lot faster and save a lot of productivity in the process. Exactly. I mean, well, part of that dilemma, and one area where there could be some help is on responsible corporate officers. You can't register with the Secretary of State unless you put your corporate officers in the registration. If you're a C Corp, if you're an LLC or an LLP, all you have to have is a registered agent. And so when we start looking for people that are involved with an LLC or an LLP, we're left with going after all the members of the organization, whether they're passive or not. And many would argue that's not a great government ideal to go after everybody if they're passive. Whereas if it was required through legislation that the registration couldn't be accepted or made without a responsible party, it would save everybody a lot of inconvenience, save us a lot of expense, and we wouldn't burden people, because it's obviously stressful to a lot of people to hear from us, not to mention they don't want to hear from us. But somebody who's a passive investor, to get those kind of notices, it really puts them in a tailspin.
Okay, I think if you don't mind, we'll kind of go to Q&A now, if you're ready. Everybody's got the outline. Hopefully that'll be helpful. Representative Powell has a question already posed to you about the beta test in Hall County and the counties, and then I'm going to recognize Representative Flood will be next after you have dealt with You want to restate your question, Representative Powell?
Thank you, Mr. Chairman. Basically, it's my understanding that because of these pilot projects, that the department was made aware of businesses that were transacting business in counties that did not have sales tax numbers, and on the contrary, that the cities and counties involved also found out that there were people paying sales taxes to the state that were cited in their community and weren't buying business licenses, which appeared to be mutually beneficial to share this information. And my question was, number one, was it significant enough that it's worth doing statewide? And the second part of the question is there legislation that needs to be enacted to encourage, authorize, because I know you've got privacy issues and things like that as far as sharing information. So my question is there legislation that is needed in order to make you comfortable in doing that and to allow you to do that?
Well, our philosophy is that anything that we can do that, one, doesn't cost too much, but can make us 5% more efficient is worth doing. So if it makes us 20% more efficient, it's even better. You know, when we work through issues in different areas of tax, you might be 6 areas of contest that come up every year. Well, if we can take 3 of those off the table, we're better off. So I'm going to let Ed speak to the more specifics of what we found in the pilot, but it's certainly worth doing, and we've had other counties come to us, and they want to join the pilot, but we're trying to finish this one first, do the second one, and then expand the program even further. But the sharing of information helps everybody tremendously. I mean, it's just like when you hold a liquor license until they pay the tax obligation, it's amazing the kind of result you get from that. It's the same thing here. If you can't get the business occupancy registration or permit without the sales tax registration and vice versa, the complexity of it is that some people might be involved in activity that have a sales tax obligation once a year, one time only, forever, and other times is they've never been that way, and 1 year they haven't. So you got to be careful, because when you turn on these automated systems that start firing out these notices, you have to have the controls in place to give people the opportunity to raise their hand, so that in the zeal to get as many people as possible, you're not harassing somebody who has a unique business model. So it's definitely worth doing. Chairman O'Neill and I talked about an idea this summer that I'll let him tell me when he wants to talk about that idea, about something we can do at the local level that will get the results that they want and the results we want without compromising taxpayer confidentiality. And I would just urge everyone to keep that paramount, that Georgia's privacy laws are very strict, but they're there for a very, very good reason. And you know, we can talk about numbers with counties, and we can talk about specific businesses, but I really don't believe, from a policy standpoint, you want us talking to them about individual taxpayers' tax status, because you have people talk about, I went through the parking lot, you got a lot of customers. Have other people say, we got a new Walmart in town, why isn't the sales tax revenue going? It's because they cannibalized every other business in town. It's not net new business. People, if unemployment is 10%, and people are out of work, and people that have a job aren't spending money, a new store is not going to just magically create sales tax. But you have people opining that and talking about that taxpayers' returns in public meetings, and you just, when it gets back to when they start doing it on an individual or small local business model, or because somebody doesn't like somebody, that's a policy disaster. But there's solutions I think we have that can get them where they want to be and where we want to be too. And if you'll go some more into the pilot program itself, then we'll come back to it.
Yeah, the pilot program's been very good, and Hall County has been exceptional. There we have a good IT person. The difficulty that state and local governments have right now is matching the data. We don't have common identifiers. So there's no requirement at the local level if somebody comes in for a business occupation tax license. There's no requirement that you got to have a sales and use tax license. We think that's where you get the biggest bang for the buck. If there was some kind of legislation that would require businesses to have first, if they're a retail business now, not a service business, but a license from, a permit from us first, or registration. The Hall County thing has worked out real well, but you need to know that we started out with 3,800 names, it looked like. We ended up with about 1,400, and we're chasing about 1,000. And we sent out first letters to those out of the day warehouse first week in December. We've gotten 21 registrations out of it. I can't give you the dollar amount, but we promised Hall County that in total we're going to give you the numbers that were registered, the total amount of dollars, the value of those registrations. What we have come across, which is kind of unusual, is we got 63 businesses that said we don't have a business. We're inactive, but we keep the business license because of zoning requirements, and they want to be grandfathered in. Now, you guys would know more about that at the local level, but they're keeping this business license because essentially they're grandfathered, because the zoning has changed where they couldn't have that business anymore. So there were 63 of them. Unfortunately, it's higher than the 21.
And in cases like that, we don't want them filing what we call $0 returns. It's a harassment to them and to us. It adds no value. And so, again, you have to parse through that in the treatment of it.
Representative Flood.
Thank you, Mr. Chairman. Commissioner Graham, thank you for your presentation. It seems that you guys have done a lot with a little and brought the department into the 21st century. I had a question with regard to the amount of cuts that you endured during the last budget cycle, and particularly in the personnel. What's been the impact? It sounds like you've been able to accomplish a great deal, but what has been the net impact in terms of your ability to collect the revenue that the department ordinarily would have collected?
Well, last year, starting with the Joint House and Senate appropriation presentation, we gave the framework for our budget recommendation to the governor that the governor accepted with his changes that were part of that. And the way we went at it was that we weren't going to take the approach of closing field offices around the state to alienate regions of the state that need to talk to a human being or be able to access a human being to try to resolve an issue. Sometimes you just can't get there, or making them drive to Atlanta if they wanted a meeting. So the option was to slow things down by doing the personnel cuts. Because statutorily we can't decide really what we're going to do and what we're not going to do. It's how much or how fast we do it. And so with those cuts, we ultimately, at one point, we had laid off 300 people, or 18% of our staff, throughout the year. It slowed refunds down 3 months. It's 3 months, and that's what we presented in January and 4 other presentations, that's what was going to happen. Now, we were cautious down the end run of the fiscal year to make sure we didn't go into deficit spending, because a lot of our operation is funded by the cost of collection fee added to delinquent accounts that go to an official assessment, where some of that money can be spent for collection activity. But we don't get that kind of money. Most of that comes in the last 3 months of the year, so you can't advance spend without risk of running out of money and going to deficit spending, which we can't do either. From a collection standpoint, we laid off 75 of the 375 of those people were field agents and collectors at the regional office level. The net effect of that is that it probably cost us around $35 or $40 million that were collected in this fiscal year rather than last fiscal year, just by the timing of it. We're going to get there. They're not going to disappear. We're going to find them, and we're going to get them. It's going to take longer. This year, we're taking more chances that we'll spend everything we got, and we'll have to have a lot of collection activity through the January through June to make sure we pay for things. But we're doing everything possible to make sure we don't hold people's refunds up any more than necessary. Probably won't be as costly as last year. We didn't deficit spend last year, but we also didn't have a whole lot of money left over. I'm guessing, but I think it was like $100,000. That could have helped a lot of people get the refund faster, but we couldn't risk deficit spending.
Just as a quick follow-up, did by chance, because of the additional costs for postage and for interest on some of the delayed payments, have you reconciled the cost savings of those employee cuts as compared to the additional expenses and the delay in those collections?
Well, the cost or the expense, the budget reduction we took last year was just over 10% and $12.5 million. The interest on the refunds was a little over $2 million plus some postage. We did find out through this process And rather than doing it internally, we outsource those interest checks to a vendor who's been doing work for us in a different area of like on our 1099 distributions. Their postage rates are cheaper than ours because they do more volume than we do. So we saved a nickel or 6 cents an item just on that alone. Is that, make sure I'm still correct on that answer after the fact. Plus, it's a check that's attached to a piece of paper we can actually put messages on and explanations on about what it is. So rather than the traditional sense, we print a hard check, and if we want to give any information to the taxpayer, we'd have to do another printed notice and stuff in the envelope, all of which costs money. So some good came out of it that's making us more efficient by identifying that solution. But we're going to do everything possible we can to avoid that this year. And anybody who will file electronically will help. Now, the IRS has done something that's requiring bulk filers of tax returns. Historically, if they had filed $250 a year or more, they had to file electronically. The IRS has dropped that threshold to 10 this year. And so that is going to push a lot more electronic returns through our universe, too, which is great news for us. But I don't have a number what that translates to yet.
Thank you.
Commissioner, I want to follow up on what you just said about tax returns. You were in my office January, February last year. And I thought I'm almost sure you said you laid off the second and third shift on the processing. Mm-hmm. They were all temps. So you took that initiative to do that. Isn't that correct?
That is in the full-time equivalent of the 300 people we laid off.
Yeah, but you did that. You eliminated the second and third shift. I mean, one, because we cut. It was on the governor's recommendation.
Yeah, but that was if someone didn't understand my point, it wasn't. Okay. I wasn't trying to say anybody here.
Well, it sounded that way.
No.
And the other thing, the call center didn't get all the calls. I got about 250 of them myself on tax returns too. So I didn't want Denise to think she got all the calls. So
she just got the other 1.1 million. But no, I mean, clearly the budget recommendation was followed in the House.
But you made the recommendation. You took it on your own initiative to go ahead and lay off the second and third shift. You told me that. Because you told me you wanted everybody to e-file. And I told you at that time, not everybody e-files. I e-file now because of what you told me. But I wanted to make that correction on your statement.
Well, I'm not sure what misstatement I made. I mean,
well,
of the 300 people.
You're saying the budget cut is the reason you laid off the second and third shift. We put money back in the budget to hire back the second and third shift. And that's the reason we went in a delay on the tax returns to individuals.
The budget cut was our recommendation.
To the governor, to the Office of Planning.
We were given the requirement to cut 10% of our budget. It was our recommendation. I'm not trying to put that on anybody else. I mean, the only other way to get there was to close operations or cease doing things. I mean, we have full responsibility for what took place.
Well, you made it sound like we did it. We did not do it. So.
I don't think I've ever said that, and I didn't intend for it to be interpreted that way.
18. Chairman Williams.
Thank you, Mr. Chairman. On the local government and property, Commissioner, with this depressed market out there now, what effect is this going to have on the valuation of property tax and digest that the local governments? It's going to be devastating, is it not? If somebody's going to have to raise taxes, what I'm afraid of.
Yeah, there's been devaluation. I'm not sure who's gotten a devalued assessment, but clearly there's been loss of value in certain areas. I mean, uniquely, in one case, we learned the other day that some automobile types, a few of them, have actually gone up in value this year over last year because you couldn't give them away last year during the height of the gasoline problem. But to your question, yeah, it's there. It just depends on who follows the requirements under the code and the guidelines. Either that or they have to change their spending formula.
Well, I feel it's going to have a negative effect on local government. They're going to have to reassess their tax digest to accommodate the devastating loss of property values in their local jurisdiction.
Yeah, without changing their expense commitments, they'd have to, yeah.
Commissioner, we've got several questions blinking at me, but I want to follow up on the budget cut question that originally was posed to you by Representative Flood, and the impact of that. And this may not be something you'll have a specific answer for today, but we're going to meet again on Thursday, we hope, and maybe we can have some quantitative answers. But this committee has received evidence before from other sources. The issue here is not who to blame or who said it or anything else, but that we've had people tell us that for every auditor at Georgia Revenue that cost about $70,000 a year, we can expect about $1 million in tax collections. That's one number that's been given to us several times. There's another class of tax collectors that have a different nomenclature than auditor. I think they might just be called collectors or something. We've been told they cost the department in the neighborhood of $50,000 a person after trained. You know, that's the annual salary and benefit cost, or it may be more than that. We've been told that for each one of those people, that the likelihood of tax collection is about 6 to 1 of what they actually cost us, because it's in a more, I guess, maybe simplified tax collection environment. With that being said, I have a hard time every year reconciling why it makes good sense when we are so desperate in this state for revenue to fund the core missions of this state: education, health care, the things we all agree, regardless of political party, are what the state of Georgia ought to be doing with its revenues. Facing the huge budget declines and deficits that we have, why does it make sense to cut auditors when we know for every 70 we pick up $1 million? Why does it make sense to cut tax collectors when we know for every 50 that we pick up 350? And why wouldn't it make more sense to see where we cross the line of diminished return in that regard? And I would further support that contention by saying to you that all of those businesses out there in Georgia, and I fully believe that 98% of, or some huge percentages of the businesses in Georgia are legitimate, hard-working, play-by-the-rules, abide-by-the-law companies. But for everyone that we let cheat, that we don't audit, that we don't deal with, we give an unfair competitive advantage to a person or a business that does it the shortcut way without hard work and dedication to abiding by the law. And if they're not somehow afraid or concerned that we're going to enforce the tax code, which, by the way, is the mission of this committee, the defined mission is to maintain the stability of revenue resources for this state, so that we can and then other committees appropriate it. Please make me understand, and the other members of this committee understand, why we wouldn't make a $70,000 investment to generate $1 million we wouldn't otherwise have, and why we wouldn't make maybe 50 of those until we got to this diminishing return. And you may not want to say that today. You may want to get more data, but I'm trying to just get it down to where it's at its simplest form. And I think maybe Representative Flood alluded to it. What was the impact of those cuts, no matter how they were apportioned? And one last question with that, and then I'll take a lot of these other questions. If we all decide that it's in the best interest of Georgia to make the investments in the resources that it takes to achieve these exponential tax collection, and we're talking about taxes that are actually owed, that are just otherwise now not being collected. I'm not talking about new taxes. I'm just talking about collecting what's really owed to us. If we make this investment, does our system provide for the fact that we can trace those expenditures if we decide to do it through your department? In other words, we say we want 3 auditors or 5 auditors or 10. Does the system now of accounting for the state have the ability to tell us that's exactly how the money got spent? It didn't get spent, as Representative Rogers suggested, by cutting off 2 shifts of doing refunds or some other allocation within the department. If we, first of all, do you think it's a good idea to make the investment? How can we quantify it? And then secondly, if we do make the investment, can we truly account for it? And can we put maybe triggers in it that, well, if we thought we ought to have collected an extra $200 million, by April, and that didn't happen, is there an accounting system we can look at and say, okay, we're cutting off the investment at that point? That's the rest of that second question. I know it's a lot at one time, and if you don't want to try to do all that today, but I never have anybody give me a good answer to that from anywhere.
Well, just a point of clarity on the portion of the budget reductions cuts from last year that we recommended, the governor accepted, and the House and Senate accepted. Those processing people didn't just process refunds; they process any type of return. So it wasn't like we were putting the taxpayer to the disadvantage of the state and its ability to process money. It's all part of the same universe. But your numbers are correct. Our history has shown that auditors on average collect $1 million. Tax collectors or revenue agents collect $800,000 a year, because many of the people that are in that delinquency path are going to stay there until they are engaged, just like any other past due for some type of credit card or power bill or something else, until you engage them. And that's only what we know about, those numbers. But it also takes people to get behind what other activities going on we don't know about. I hear people often talk about, they misspeak using a number that I've used every year in my Joint House and Senate presentation about the known delinquencies of $1.6 billion. And they characterize it goes $1.6 billion a year as uncollected. That is not true. It's $1.6 billion that has accumulated over 20 years of past dues. It's a 20-year number. The current number per year is probably in the $300 or $400 million. That's a lot too, but people are engaging. A company goes off the train track, and you got to engage them on a sales tax issue. So you're in the state that's big, you're going to have some of that. The investment is well worth it. We are a long way from the diminishing return. For instance, on the more sophisticated corporate tax structuring cases we deal with, y'all have helped us with legislation to disallow captive REIT transaction, real estate investment trust. Any one of those audits can generate anywhere from $10 to $35 or $40 million alone. But it takes a number of experienced professionals to unwind that, working within the department. So one auditor can't necessarily close that transaction and unwind that structure by themselves, because once we go down that path, then the taxpayer starts going for pressure elsewhere from a political realm, and it just slows the process down. And as long as it's slowed down, it's keeping us from dealing with the next taxpayer who's engaged in the same activity. I think what you have in the state is a culture amongst people who want to be delinquent that it's a behavioral issue. They know as long as we don't have the resource to get to them, it's worth their while to take the chance that we won't ever get to them. That's why we don't do blanket waiver relief. If they knew it, should have known better, we're not going to give them blanket waiver relief from something if they knew they were engaged in it. But I think the numbers that we've most recently put together in a intermediate short-term range, we could put 100 auditors to work spread between individual income tax, corporate, middle market, corporate, sales and use on large cases, and sales and use in the middle market. As fast as we could hire them and train them and make sure they knew the way we were doing business. And is there ability to track their productivity? Sure there is. I mean, whenever we use cost of collection money to fund a collection activity, we have to be able to justify it by code that those people are doing collection work. The work we do for Georgia Lottery and Community Health that they're paying for us to do on a restricted fund basis, we can track that all day long. And that is the only work they do. They can't be cannibalized and, well, we're going to put them over here for 30% of the time. That is the work that they do, and that's what they're dedicated to. We can do that all day.
Thank you, Commissioner. I promise my committee I will not over ask and give you all a chance. I'm sorry I've lost connection with the order of things. So if I call on somebody out of order, but please accept my apologies. I'm just going to try to start right here with number 25. That's Representative Powell.
Thank you, Mr. Chairman. I've got two a lot briefer questions than my last one. The first one is in the issue of refunds and interest on refunds. I have 2 children, both who worked part-time, and so they got very small refunds. But they got them late, and then they subsequently got checks from the state of about 32 cents in one case and maybe about 12 cents in the other case. My question is, number one, how much sense does it make to process this interest check and pay the postage to refund 12 cents? And the second part of that is, why could that not have been added into the refund check and have done it all at one time and saved that extra postage and processing?
That's really not a short question. I'll tell you why. That's fine. I'm glad it's not. Okay. Well, historically, the department didn't pay refunds on individual income tax issues. I mean, didn't pay interest on them, but we did in corporate. And we always knew that one day that somebody was going to contest that, whether legally or otherwise. We didn't know that this event last year would make that transition for us. We bantered about every different option possible on how to deal with the interest issue. First issue was the computer systems weren't programmed to calculate interest on individual income tax, so that had to be done first. If we did that first but didn't send out the refund, we'd have had public outrage about where's my refund. I'm not worried about the interest yet. Yeah, it would have been better to send them both together, but we'd have delayed refunds even further, and people would have been more outraged, especially in a terrible economy. So that was one threshold we crossed. And I talked about our recommendation and solution with a number of people in the governor's staff and the governor, and with Chairman O'Neill, and on the Senate side too, say there is no right answer. I even posted to my CPA, my tax accountant. The flip side of it is there were over 100,000 that were going to generate $1 of interest or less. If 10% of that 100,000 people called the department saying, it's my money, I want my interest, the expense we would have wasted in taxpayer services would have been far in excess of what that interest was and what the cost to print that check was, and just say, we use that method because such an issue was made in the media over it. We use that payment of that interest primarily to notify people, here's how the interest is calculated. Because many people thought the interest was calculated based on the day they filed it, not after April 15th. So it was designed to be an explanatory note with the check attached to it. You know, where do you draw the threshold? Everything less than a quarter, everything less than 70 cents. At the end of the day, we went on the principle, it's their money. We didn't deliver as a department. There's a lot of services we provide in this state that don't pay for themselves. But again, if 10% of that universe, only 10% of it, called us, it would have. The most important factor is that's at least 10,000 calls. If they got through the first time, that would have kept 10,000 other people from getting a tax question answered. And we came to the conclusion that it was best to deal with it, get it over with, and move on so we can provide more service to more people and more issues going forward. I agree with you on the rationale of it. No, it doesn't make any sense. And could we have taken the gamble that 10,000 people out of 100 wouldn't have called us for less than $1? We could have, but I made the decision and the recommendation was accepted, and we went with it.
Quick, please.
I understood you to say that the responsible party rule is only used.
Well, I think he stood it, so if it doesn't stand up, I can blame him. But, but I,
My question is that if we're talking about fiduciary responsibility, I know the IRS takes the position, whether it's payroll taxes or anything that's fiduciary, then they will hold some member of the business organization personally responsible if they can't get from the business. Is this a statutory issue, or is this a judgment issue the department? I mean, it's the department only statutorily allowed to go after responsible parties in fiduciary situations on truck taxes. Is that something that needs to be addressed statutorily?
yeah, it's a fine line, and the department does need discretion because as Ed commented earlier, if we can't establish that they had an active role in making decisions, like we're not going to go after the HR director unless the HR director is signing checks, is on the bank signature card, and is involved with some decisions, typically. Also, inversely, somebody may have that authority, may have absconded with the money willfully, but they're not listed as a corporate officer. We'll look to them if there's proof and evidence that they were involved in it. Ed, do you want to touch on that?
I mean, statutorily, it is for the fiduciary taxes, which have been collected in trust. What other types of taxes are you thinking about?
I mean, I'm thinking about sales taxes and payroll taxes.
No, sales taxes and payroll taxes. We are going after the responsible parties once we get through the process with the entity.
Okay, I just understood you to say it was truck taxes, and that was my question.
No, I'm sorry. I shouldn't have used that word. I should have used fiduciary taxes. The other word was trust, T-R-U-S-T.
Okay.
Trust taxes.
Chairman Parsons.
Thank you, Chairman. I just want to ask you a question under new technology on your form you've given us here. I had actually visited I don't know what it's called, the Input Center or
Processing Center.
Processing Center back, I guess it was last year.
And we appreciate that. And anybody else who ever wants to go, we're happy to take you out there and show you. It's more meaningful to go when there's a lot of work out there, but
it was a good tour. I appreciate it. And I notice on here you have, and I'm not sure exactly what all this, these are things that you'd like to have or you're requesting. But scanners, high-speed scanners, I remember seeing the high-speed scanners down there that were scanning in documents, very high speed, very impressive. But one thing I wanted to ask you about, one thing in the processing of the information that comes in, I did notice that people were working really hard and getting the job done, but there were so many places there where, there was one particular place where you had people working at terminals who were actually looking at one terminal, taking information, literally viewing and taking information off of a screen and then inputting it into another system, I guess it was. My question, I guess, really is, I noticed on here optical character recognition scanners, and I'm just wondering if there is some kind of a plan, if there's not some kind of way that you could reduce a lot of that manpower and time. It just seems like even with the forms that come in, since they are forms and information is put in certain places, that a scanner could actually take that information and place it in a computer system where it needs to be placed, so that it can all be referenced and cross-referenced. I don't know if that's something that you could do legally with the information that comes in, but there would probably be some errors because some would be handwritten, and there'd be some errors in the recognition of it. But I'm just wondering if there's any kind of a plan or anything y'all looking to do that. It looks like there's room for some real improvement there.
well, there's always room for.
Nothing against what they're doing, but I'm just the process.
I understand. I ask the same question every day. What you're looking at there. To your first question or statement, this conversation today was not to ask for anything. It was to help explain what we're dealing with, what we're doing. This stuff y'all have already funded and y'all have already helped us with. Okay. We want to expand the use of some of it, and we'll talk about that in the weeks to come. But the high-speed scanners, just put it in context, those things, each one processes 18,000 documents per shift when it's going wide open, when they're operating at capacity. That's a tremendous savings. What you're looking at in the data entry room is, without those scanners and without that imaging and the indexed images are coming from that, historically what you would have found out there is hundreds more people with stacks of tax returns thumbing through them, data entering the same thing. Now it's called keying from image, and they're extracting the data from the return that goes in there. And to your question about, well, why can't it just read the document itself? It doesn't matter how many forms we convert that are scannable, and we're converting all our forms over time so that they're scannable by those machines. People will write on the lines out of the box. They'll add pennies when there shouldn't be pennies, and they'll actually be dollars. And so as long as human beings are filling out their form rather than typing it, it can't be. If it's typed in on an electronic basis, then we don't have to do that data entry to extract it. If it's a manually filled out one, it does take some requirement. The other thing is, you'll see on the tax returns, a number of categories have multiple different tax exemptions, credits, deduction, whatever, on the same line. And so, or you might have an address issue that you're dealing with. Part of what they're doing with data entry is extracting some of that data specifically for the thing that we're looking for. Because if we were, ideally, every return would be electronic, every tax option would be its own line item, and then we could give you a statistic on everything everybody's doing all over the state and what benefit it has. But that tax return would be dozens of pages long. So that's not practical either. And we'll always have a paper universe. We're always going to recommend having staffing. That there's some people who are going to want to file by paper. But the short answer to the question is, what they're doing is taking that image off, that information off of the image to create the information for the refund, or connecting the payment that we receive separately to connect it with that return that they're doing the data entry off of. And you can't just do that by imaging it and extract that without a human being looking at it and making sure that somebody kept it in the box. Okay. But there is plenty of room to go there.
I just know that these scanners. I mean, the ones I've dealt. I mean, they're very intelligent and they have a great degree of recognition. But I understand. That was part of my question. I didn't know, with what you're dealing with, there's not much room for error, obviously, and with handwriting and things like that. So that's my question.
Well, my view is it's like you go to an ATM, you expect 100% accuracy 100% of the time. You don't. If a bank or a mortgage company added an extra 3 cents to everybody's escrow payment, you got a million mortgages, you pile up some real money in a hurry. We can't have our employees encoding something incorrectly even by a few pennies.
Okay, thank you. That was mine.
That's a great question, and thank you, Chairman Parsons, for going out there. I mean, that's how we learn, and I think that's laudable that you noticed that. I'm really pretty impressed by that, frankly, and I mean that. Representative Smith, I mean that.
Thank you, Mr. Chairman. Commissioner, you had mentioned that there's a group out there that has a culture of delinquency. When is the Department of Revenue going to have a culture of prosecution? Because I can't remember the last time I saw on the front page of any paper where somebody was being fried for not paying their taxes. So, when do we, if we've got this culture out there that bound and determined are not going to pay, what are we doing to address that? And how are those who are not paying going to get the message?
Well, some of those people are in this room, so and I don't mean that facetiously. I mean, there's virtually nowhere I can go in this state in a large audience, and I don't know that there's somebody in the audience that's on our radar screen for major delinquency. And sometimes there are people, not that I just know who they are, I know them personally, but they are. I mean, when we started this compliance initiative, we started 5-6 years ago now. Nobody could tell me the last time anybody in Georgia was prosecuted for any criminal tax evasion. Zero. And the issue is the AG's office, they've got a gigantic caseload. They don't have time to build the cases and gather evidence because we have to give them all the background information, then they have to go look for it. So I said, fine. We cannibalized part of our budget in other areas. We hired a former assistant DA who worked for Bob Keller at Clayton County, who's on the Board of Pardons and Paroles now, I think is where he is now. She runs a special investigation division so that we had a qualified attorney, experienced prosecutor that could manage our investigators to gather evidence, to work with the compliance division to rein that in. I mean, and we now have 5 full-time post-certified investigators that work in that area, along with the staff of about, I think it's 8 or 10 former tax people who are in special investigations who are doing the work, doing the scanning for refund fraud and other things like that. I wish I knew the exact budget number we've got dedicated to that function now, but we could use a lot more, and you'll see in our budget request a request for more investigators and more authority to operate. As I noted earlier in the presentation, in last year, I think we've got 3 guilty pleas and 5 indictments. Not one case has been lost yet, but there's plenty more to do. and plenty more we could go after. In a lot of cases, what we do to get after it, to the heart of the issue is, if we can't get there, we're working a lot with the IRS's criminal investigation division, and we're sharing information and sharing referrals. And so a number of people you may not see getting hit on our radar screen are on theirs, and they're getting prosecuted. As I said, we have 2 people in jail, literally in jail right now. They were arrested in the last 72 hours for tax fraud issues.
But how is the message getting out to those who've been working the system to say, okay, you know, I'm fixing to get caught? Because, you know, if they don't know that, or if they work in the system, they've been working it for years, you know, what's going to give them the message something better than seeing somebody on the front page of the paper?
I need more people like you and Representative Scott, who's, I know this is deep to his heart and mine. We fight the issue of not letting it look like Big Brother's getting overzealous. It's not exactly reviewed favorably if the department or I am on the front page of the paper grandstanding any issue and getting overzealous.
Well, I don't want you on the front page of the paper. I want whoever's not paying the taxes.
Unfortunately, but I'll take all the help I can get, because, you know, we can. I mean, I'd love to have a subcommittee, a small group of people. We could show you the exact caseload that we have and the opportunity we have to pick from. But every case, last thing we want to do is take a case to the Attorney General and say there's no evidence here or insufficient evidence. Every case we've taken we have won, and there's never been a problem with the data, the evidence that we've gathered, or the way we've gathered it too, because we're going to make sure we give everybody due process and don't abuse anybody in that process. But like I said, it's not just a criminal aspect out there that's doing it. It's what are otherwise perceived to be reputable people. Some of the biggest cases we've gone after in the last 6 years, in one case, have been senior partners at some of the biggest law firms in town. In some other cases, they're known as the biggest philanthropists in town. It's because they're taking their tax bill, giving it away, and getting public recognition for that, and taking a total pass on us. I've even gotten involved blocking people from getting One Georgia Authority money out, statutory some of the One Georgia Board. We're getting ready to pay a guy $100,000 for a new project, and he's claiming I'm 70-plus years old, limited income, you know, but because he lives on Peachtree Battle and has a lake on house in Lake Burton, and my parents have known him for 35 years. See you later. You know, but that's the kind of stuff we go through sometimes. The issue is, each one of those cases takes a long time, so you have to have a certain number of people to move a number of them concurrently. Or concurrently is the way we want to run it, but what we're left with is doing them consecutively, and that's why we don't get to more than we get to.
Well, that's kind of like the auditors and the prosecutors.
We want to help these people get all the recognition they deserve.
Well, as they say, I'm your boy. If you want.
Representative Black.
Thank you, Commissioner. Appreciate you being with us today. Earlier you were talking about the money that is collected in interest and fees on some of these back taxes that you collect, that some of it that you could use within the department. I thought all of this money went to the general fund, so explain to me what can you collect and keep and use within the department?
100% of tax, penalty, and interest goes to Treasury. When something goes past official assessment, where we start collection activity beyond that, a 20% cost of collection fee is added to those accounts statutorily that the taxpayer then has to pay. Of that 20%, a certain percentage is paid to private collection agencies that work with the department to work on typically individual income tax delinquency accounts, where they're doing the phone calls and stuff, because otherwise that money has to be appropriated. That's why they added on cost of collection money. Some of the rest of that money is used to fund, I think it's over 160 salaries of employees that we have in a little over 100 employees, full-time employees in that 1,200 number I gave you earlier. Those are collectors, examiners, and auditors we wouldn't have if it wasn't for that funding source that would have gone away.
So you could use the 20% collection fee?
No, we can't. You know, the contract amounts that go to the collection agencies that do the collection work on individuals is paid out of that,
right.
And that can range. You know, those are negotiated rates that aren't subject of public disclosure here.
I mean, I understand if you contract with somebody on these, he gets paid out of it. All right, so
What I'm saying is the department's not using 20% of that, and it's in all of our budget information and as the funding sources. So the appropriation process sees how much money is collected from one year to the next, and how much the department's using. But it's not. People aren't going to conventions on that money. I can promise you. It can only be used for collection activity, and we have to document that the money that's being spent is being spent on people who are actually doing collection work.
okay, I'm going to back up and make sure I understand it. In other words, you can utilize that money, but you've got to account for it to the general fund.
After we pay the collection agencies that help us get it.
You pay the collection fee, and then you've got some part-time people.
No, these are the 100+ people are getting paid with that. Those are full-time, experienced, tenured employees that we would have had to cut from the department historically.
But you're paying them out that collection fee.
I'm sorry?
You're paying them out the collection fee.
If our delinquency goes away ever and our collection activity goes away, then those employees would have to go. They'd be going home.
But you can use whatever you spend on collection at that 20%.
Generally, yes, if it's collection activity that we can document.
Right, okay.
It can't be customer service, public service announcements. There's a lot of things we do that it could not be used for.
Representative Beasley Teague.
Thank you, Mr. Chairman. How y'all doing? Happy New Year. It sounds like you're walking around with a Louisville Slugger. If so, then, Slugger. Baseball bat? Heard about baseball, right? Okay. All right. Now, one of the things I would like to know, is it standard procedure that when you audit individuals, and it's like 6.5 years out, and because of scanning problems, I guess, you say that they haven't filed their income tax, and then when they send you the information back and whatnot, what do you say to them when they send you the information and it shows that they are due a refund 6.5 years out? They're due a refund 6.5 years out. You're scanned the paperwork, and apparently it didn't take. What do you say to them?
If we have no record of the return
Right.
within that 6.5 years, the statute of limitations would have told you have 3 years to file either the return or a claim for refund from the due date of that return. So if it was due 4/15/10, you have 3 years in which to file it in order to claim the refund. If you file it 6.5 years later, or we have no record of it, you cannot get the refund.
Okay, your office says that the person did not file for that particular year. 6.5 years out, they passed the date of, like if it was 2001 and 2007. Well, seven.
Yeah.
6 months. You said
6 years.
you did not file.
Right.
Then they send you the paperwork that show you that they did file. What do you say to that individual when they are due a refund?
Well, I think part of the issue is people have to understand under Georgia law, you're required to file whether you're owed a refund or not.
Okay, but I'm just
saying. I'll take it further than that.
Okay.
But some people in the last couple of years keep wanting to, and not you, but others have said that, well, if I'm going to refund, I don't have to file. Well, yes, you do. Unless y'all change the law, you got to file. Because otherwise we can't put everybody on, unfortunately, can't put everybody on the honor system. But if somebody provides the information to us upon request, and I guess I'd need to know more about this particular instance, you're always welcome to start through my office and Mac Chandler to say, let us look at the specific case to see what happened. But that person would get a refund if they were owed the refund. They wouldn't get interest for 6.5 years because you'd be amazed at how many taxpayers, back to some of the earlier questions, they'll file a return knowingly not taking certain deductions and exemptions, file an amended return 2 years later, and make 12% a year in interest on the corrected position. It's the best rate of return you can get on an investment in the last 2 years. So we're having to scan for that kind of activity too. where they purposefully don't take something they're qualified for, then come back and say they're doing an amended return. And
Okay, but
anytime y'all want to go down that road, anything you want to go ahead, but just know that you may or may not get through. But I'm sorry, we're not answering your question.
Ms. T, you got?
okay, 6.5 years old, and they are due. I'm telling you, they are due a refund. What do you tell them once they've sent you the paperwork? Do you give them a refund, or do they have to do something else? What do you do?
If they're sending, the paperwork that they're sending is proof
That they filed.
that they filed, then we'll look at it and we'll give them the refund if we're wrong.
Okay.
But generally, all we get is the return itself. Here's my copy. I filed it. Well, that's not sufficient. So postmark, receipt from the post office.
Yeah, part of.
Okay, the situation was you were scanning the paperwork. Something happened. Okay, and you had the paperwork. And that's why I think people should be careful when they're doing such things. Okay. And then the notice goes out that the person hadn't filed. This is out, 6.5 years.
Yeah,
What would you say to them? You would give them a refund?
Well, we're first going to have to ask more information.
Okay.
If they just send us the 2-page return without their W-2 or anything else,
They have to send you the whole all of the paperwork now. They're going to send you all of the paperwork that is required for the state.
I understand that you're saying that, but you'd be surprised how many people think 6.5 years later that you could just do the 2 pages. But just so you understand, we're not only imaging and scanning the return, we're also doing the envelope that the return came in too. It's one thing, and I'm going to get back to your point in a second. One thing we've done in the last year is to be more friendly and put people more at ease. If we don't have a copy of the envelope, an image of the actual envelope or the envelope itself, we're not going to charge anybody for late filing, because we had too many people that were all cranked off about, you weren't processing it and you had it. Well, now we passed a regulation, we have to follow that. But your person, in your case, would be entitled to a refund, but they would need to show us the return. And all we would have to do is we can exchange our information with the IRS too to say, if this person filed federally, like if they question, well, I know I sent it to you, but you say you don't have it, and I know I sent it. Well, we can always exchange information with the IRS to validate whether they got it. And maybe it never got to either one of us, but that person can get paid, but they're just not going to get 6 years of interest for it.
Okay, ladies and gentlemen, we have one more question, and I think I heard to Ms. Teague, if you want to get further into that on an individual basis, Mr. Mac Chandler is over here, and he can talk to you.
And also, excuse me, if somebody told that person they're out of luck, then I need to know that, because we ain't treating people that way. If somebody...
Leave your card here and I'll give it to them.
All right, because if somebody was told you're out of luck, then that's not acceptable, but I got to know that stuff before we can do something about it.
Okay, last question I see, Representative Pruitt.
Thank you, Mr. Chairman, and thank you, Commissioner, for being here today. I know it's been a long process, but it's certainly been enlightening in many ways. Got a question or two. Would you agree with me that the longer a debt lingers, the harder it is to collect?
Sure.
Do you also agree with me that the value of the dollar decreases over the period of time? Based on that, I'm curious to know how much low-hanging fruit may be out there that our investment for return would be greater. I know you've got multiple areas where there's delinquency, some personal, some business. Do you categorize those collections based on the low-hanging fruit, basically the ones that will take the least amount of time to collect?
Yes, so certainly. 6 years ago, when I first asked the question, how much delinquent tax is there in Georgia? With all due respect to Ed, they couldn't answer the question because he was here back then. So they couldn't answer the question because nobody was looking at a macro basis. It took them 3 weeks to consolidate all the different tax types and delinquencies. The past dues, the 20-year past dues at that point was $1.6 billion. And I looked at Bobby Linehan and Ed and said, we couldn't get 1,000 people and catch up with this. Over the next 4 years, we worked it down to something around 700 or 800 million based on a number of different initiatives that we've got underway that he still does today. And I'll let you recast what you sent me today or yesterday on what the latest results of those 5 specific programs we do today that we didn't do before. With the bad economy, that number has grown back up. Because we couldn't chase all these people individually. We have to have systems in place that do things for us, such as hold the liquor license until they pay the tax obligation. You know, historically, the department wasn't involved with the IRS exchange agreement that only was going to cost $300,000 in computer programming to get in sync with them, plus security measures. We spent that money without, you know, just out of the existing budget. That program generated a few $100 million over the last 6 years. It's an ongoing, continual process. And Ed, you want to dive a little bit deeper into it?
I'll comment briefly without the risk of perjuring myself, so to speak. We collected $540 million in those specific programs, and they were a lot of low-hanging fruit. A lot of the things that you have funded in these technology initiatives are going to get us to where we can get at that low-hanging fruit a lot faster. I think the issue that we still have at the end of the day is the Chairman O'Neill alluded to, is that takes people. I mean, we can only send out so many notices, and we're going to get a big benefit of coming back more in an automated fashion. But at the end of the day, you need to be able to send out people. We have a large number of vacancies in the department currently, in both the audit area and the collection area. Our travel budget itself for folks to get out in the field and to travel to do audits has been cut by more than $300,000. The mileage that we use is based on the old, that has never been really increased from the old 28 cents a mile that we had several years ago. We've been averaging up to 50 cents a mile, so the money goes a lot less. So the CTAB computers that you have funded that allows the agent to connect to our office, to go out and write liens and collect money and bring it back at the end of the day or bring it back in the next day, can't be used because we don't have enough travel money to pay those people to use their cars. So you've given us a lot of tools, but at the end of the day, I still think it needs people, but that's my own opinion.
Well,
in the delinquent world, it takes people to engage people to pay, and you have to go get in front of them to do it.
I don't disagree, but here's the situation I see is that if you wait long enough on these collections, this ripe fruit, low-hanging fruit, becomes rotten fruit, and when you get there, there's nothing to collect because of the age of it in most cases. But unless I misunderstood, you said earlier that 20% of the collection fees, after it got to a certain point, went to the agency and whoever you paid to do some of the collecting. Is that correct?
Well, just to make sure, it's a cost of collection fee, not just collection fee.
No, I understand.
Because of the court costs and stuff that are separate from all that. So
right.
Just to be more as precise as possible about it, of the 20%, something north of half of that goes to the collection agencies who are doing all the dialing.
I understand.
And that work. And part of it is spent by us, and the rest is returned to Treasury. We don't spend it all. Some of it goes back to Treasury.
I believe you said that some of it went to pay these 100 people.
No, some of it goes to that, yeah.
Well, and if that is the case, and you're continuing to collect more money by the more people you have collecting, why aren't you generating more money to pay those new people?
Well, the collection of that money doesn't always come in until May, June, April,
Okay.
May, and June, and we
Okay.
can't spend it till we have it, and then you start a new year, and the rest of it goes to Treasury.
Okay.
So you start all over again with that money.
The statute itself only allows for that fee to be added at the lien stage. So while your delinquencies may be increasing to some degree, the cost of collection fee has actually been going down because we are getting to some of these earlier before the collection fee is added.
Well, there's a possibility
so you could,
that that's...
I guess if statutorily, if you wanted to add the collection fee earlier in the process, you could do that.
Would that be an answer?
Well, I'll give you some perspective. Might help shine some light on it. The IRS was using private collection agencies a couple years ago. They got a lot of criticism for it, but they were starting the process with the collection agencies when something went to an official assessment, or excuse me, a proposed assessment, just a late payment. All we turn over to the collection agencies is the lien information that's filed in the local courthouse. They get the name, the address, and the dollar amount and the tax type. They don't get the taxpayers' additional information. And part of the problem that the IRS came under scrutiny for was you had these private collectors going after people with non-public information. And there was more abusive practice. And so that's one thing that's differentiated ours. That's why you've not historically gotten complaints about our collectors being overzealous, violating collection laws. Everyone in this room would be up in arms if they did. Now, every time there was a complaint, we investigate it. If it's systemic, that collection agency is removed, and I'm not aware that we've ever removed somebody from being a collection agency for us. And they're plenty aggressive because they're paid on performance. But we got to keep a constraint on them. But
I'd like to cut this off if I could, Mr. Chairman, because I know we've been here a long time, but I would like to make one final comment. I would love to find a way, even if we have to do it through statute, that these funds are created in a way from the people who actually owe the money so that the taxpayers don't have to fund collections. It makes no sense to me if you take my tax money to go out and collect somebody else's money. And if there's a way that we could do that, I'd love to hear a recommendation from you. Thank you.
Commissioner, final question. I got two. In 2008, we funded 12 auditors. In 2009, we funded 3 auditors. Thursday, can Ed or someone bring us information on what those 15 auditors have collected for us since they have been funded, since they've been brought on board?
you might have a rough answer today, do you?
Well, they'll give you a day or so to figure it out. And also, do what?
And it's a productive engagement. The 12 are out-of-state auditors, and the other 3 are convenience store driven.
And the other thing,
there's a lot of fruit there.
I hear Ed talking about, well, most of them, you don't have any travel expense money, so I assume you've taken care of that in the budget with the governor or through the Office of Planning and Budget, or not?
We've taken everything we can take into consideration there, given the budget reduction that we were asked to plan around.
Okay.
And as you know, they leave it to us to justify a recommendation to get to the target, and then there's Q&A, and sometimes some changes, sometimes not changes, on how we balance collection, customer service delivery, payment processing, and refund processing, and we try to shoot the gap so as not to unfairly alienate anybody. We shouldn't alienate a tax compliant person owed a refund because we spend all our money on collection. They can't get the refund. We have to balance that too, even though every one of them wants us to go crazy on them. But we can't go around with the Louisville Slugger baseball bat without alienating another part of the state. So we're trying to find that common ground.
Okay. Well, if you could get us those numbers, it would be good. And also, I know Hall County, where I'm from, is where you're doing the pilot program, but I'm getting hit by our local elected officials about, you mentioned the master sales tax number for the box stores, and, you mentioned the Waffle Houses. I would like to know how y'all segregate those numbers. Are they done by corporate, or is your department doing that as far as sales tax is concerned?
Well, when a company applies for registration, they can apply as a master license holder and then add sites to that, or they just apply as a single site registration. The registration unit works under Denise. Do you want to comment on that, Denise? Or?
But how do you know those numbers are correct coming, from Gainesville? I'm going to use Walmart as an example. We've got several there. How do we know we're getting the right tax dollars back to the county of where it's domiciled?
The information comes directly from the registrant, from the person, the business, how they register with us. So we depend on the taxpayer to give us that.
So they segregate each location? Is that what you're saying, or is it just a lump sum figure?
Not necessarily. It depends on how that company registers for them. So if you have some Waffle Houses that are corporate ones, and when they register as a corporate, and they include all the stores that are in that corporation, we'll get them all together. Then if they have an independent that registers just alone as an independent, then that one will be separate.
But what he's talking about is on the distribution side.
Yeah, the distribution.
How do you get to the right jurisdiction, which stores in which jurisdiction?
How do you segregate it? How do you know?
It's done by county on how they fill out the tax form. The master license holder who fills out the tax form attributes X percentage or X dollars of sales to each jurisdiction. In the new system, it does the calculation for them once they put the sales numbers in there. It does the calculation.
Are you talking about the new integrated system that you're on now?
Right. And for those, it does the math for them. So we no longer have all the mathematical errors that we had before if they did a percentage wrong, or if somebody in Early County put a number by the MARTA tax and calculated that, not paying attention to what they were doing. Those kind of errors out. But the taxpayer is the one that fills out the return that says how much sales comes from each jurisdiction. And that's what we use to make the distribution.
So it's done on an honor system by corporate then, correct?
By D corporation,
yeah.
Yes.
So Walmart be doing this out of Bentonville, Arkansas? Is that where they do it?
Some typically they would, but some others do it regionally. But they're all subject to audit. And when we do sales tax audits all the time, Ed, you want to comment on what we look at in our sales tax audit?
Well, the reason I bring this up, they all, the cities and counties feel like they're not getting their fair share, and I'm sure you've heard it more than I have. But how do you remedy their confidence in city and county government today? What is the answer? You can't answer that, Ed?
Well, I mean, part of this conversation around you can't go to market presuming everybody's dishonest, and you can't go to market saying they're all honest either, and you can't audit everybody. Back to 1,100 employees and 11 million documents. So
I guess my question is, why do we give them one master number now? Because there's so many of these box stores. I know it's for their simplicity, but it's not for the state of Georgia or the county or where they're located. This is the issue. I got a call last night at 8:30 about it by a school board member. So, of course, in good times you don't get these calls. We're in different times now. But
I guess if you wanted to tell a convenience store that operated 300 stores in the state that they have to file 250 returns a month, 12 times a month, you're looking at a tremendously larger infrastructure to process those returns. Plus, you're going to educate everybody at the store level to use our either electronic system or our paper system.
Okay.
And in a perfect world, and internal to a corporation, you might manage a company that way to have that level of control. But you would put a significant burden on 7 restaurant store, hoping whoever he assigns to do it gets all 7 of them right.
Well, he's a CPA. I'm sure he's right anyway.
I'm sure he wants to spend all his time doing our form.
Well, I know that, but my concern is building the confidence back to the city or county that they're getting their fair share, and I don't know how you can instill that to a city and county.
To some degree, there's being an executive branch. I mean, part of your check and balance is your state auditor who works for you all. They audit us every year for multiple different things, nonstop. I mean, you're always welcome to have them look at us every month, every year, twice a year. I don't care how many times. Okay. I mean, but that's what they're testing. I mean, I wasn't around. I didn't really care about government in the mid-'90s when one of my predecessors' administrations didn't lose it, but they lost track of what was reported to be $1 billion worth of sales tax. They weren't sure what jurisdiction it was going to. It's real easy for the train to get off the track, but the penalty to reputable companies is severe if they do.
Have you told local government this?
We've tried
very hard to do
multiple times and multiple presentations, written, verbally. It's a complex way. In a perfect world, we do a lot of things. I mean, I think a question came up earlier. It has to do with the pilot program and making sure we reconcile the number of business occupancy permits with our registration. Well, not everybody sells tax, or not sales tax every day, every year, or sometimes even a year they might skip us time. But what we don't want to do is create another number to reconcile to.
I agree.
It needs to be one or the other.
Can you bring us something Thursday for us just to see how it's done, just for our own information?
The registration process?
Yeah. Could you do that?
I think so.
Okay. That would be nice to do that. And I've been to your processing unit, too, so I was there on December the 8th with Mac Chandler. And
I wish I could have seen it 6 years ago and today. And we have some pictures I've used in some of the presentations. What you have funded, even though you may not feel on a daily basis from the phone calls you get, has added tremendous value. We had a culture then of wanting to buy mail sorting machines for $400,000 that would just move the pile of mail from one room to the next, but then have another bottleneck.
Yeah.
You had employees working on 50-year-old tingle tables that had 3 sorting bins on it, You saw those sorting bins
I
out there.
did.
It's like with the IRS and what credit card operations, 20 or 30. Anything that we can do to reduce the number of transactions, the number of movements, rather than ask for more money to keep doing it the old way, we're trying to take transactions out, eliminate calls that are unnecessary. It's the same person calls back 5 times. That's not helping anybody. We're trying to eliminate 4 of those calls without asking for help. That's what we're trying to do.
Commissioner, thank you very, very much for your time and efforts today. I thank all the members of the committee. You've been here a long time. You've asked some very, very good questions. We appreciate all of your input. We sincerely do. And to our audience, you've been tremendously courteous and to make it through all of this with us. Thank you all. We want you to know we appreciate your courtesy you show this committee in these questions. And we're about to adjourn this meeting, but I want to announce to the committee that the Thursday meeting, since we're not going to be in Friday, will be upon adjournment instead of it's been told you to be at 2 o'clock. It'll be upon adjournment. So we'll look for you if you can get that on your schedule or your representatives upon adjournment. We expect that to be probably 11:30 or so.
Okay. All right.
And we don't expect it to go very long, so not near as long as this meeting has. So yes, sir.
I'd just like to, thank you for making the time available, and the rest of you for taking time to come. I just thought it was important to try to express to some of you some of the things we deal with operationally throughout the year, to put it in the context and order of magnitude. We often just talk policy or issues that we're trying to deal with without understanding the number of the issues we have to deal with and work around, and who we're trying to take care of and how we're trying to balance things. And it's always helpful when people take time to listen to that, so we appreciate it.
We thank you as well. Members of the committee, thank you. We stand adjourned.
Bye. Would you get her?